welcome everyone. This is a session we've been wanting to run for quite some time now. Ever since way back many moons ago, we heard the government announce that, hey, insurance companies, they'll pay out, it's not a problem, we've spoken to them, everything's going to be fine. We've had a steady flow of questions from a lot of you guys on the call and across our client base around, hey John, when can we make these claims? How do we make these claims? What can we claim for? And most of the time, what we're talking about here is this sort of this concept of business interruption. So we're in this unprecedented time. A lot of our businesses have closed, a lot of businesses have changed, and there could be some form of claim that we can get to generate some cash for us as business owners to start rebuilding our business as we enter into this sort of next phase of the pandemic where we start to rebuild our economy again. So what we've done is we're working with claim makers who are a client of ours, and we're going to get the guys, Nikita and Adam, who actually know what they're talking about, to give us a kind of the 101 on what we need to know as business owners and business advisors around insurance, and particularly business interruption. So our goal today is that we can all walk away with some actions around what we can do to improve our chance of a claim, how we make a claim. Nikita's going to help us understand a bit about how insurance actually works and some sort of key things that we need to remember there. So great, Nikita, over to you.
Thank you very much, John. Hello, everyone. I'm Nikita, one of the founders and directors of Claimmakers, and I'm joined by my colleague Adam, who heads up our business development.
Right.
So first and foremost, who are Claimmakers and what do we do? We are a loss assessment and claim management firm that specializes on working solely on behalf of policyholders in the event of an insurance claim. And we work on most types of claims within property as well as some other assets, covering everything from small bathroom damages in property and going all the way through to covering entire homes that might have been destroyed, businesses that might have suffered losses, as well as covering yachts and aircraft. We've been an operational business in the UK for just over 3 years. In this time, we've successfully returned more than 10 million to disaster-struck policyholders. I first want to start talking about some of what we call the principles of insurance, of which there are 3, and these are points that a lot of people simply aren't aware of. So the first principle of insurance is indemnity. What this means is that when you take out a contract of insurance, it's meant to protect you against financial loss due to a loss in physical property. So many think that when they take out a home insurance policy, for example, it's supposed to protect their home, but actually what it's protecting is the policyholder's financial interest in that home. And what a claim means is that the policyholder must be returned to the condition they were immediately before that loss. We call this internally a pre-loss condition. The second principle of insurance, proximate cause. What this means is that when you make a claim on insurance policy, the cause of that of the subsequent damages must be an insured peril under the policy. By way of example, and again within sort of the property domain, if a pipe burst on its own caused significant flooding throughout the home or the property, the proximate cause is the bursting of the pipe, and of course the subsequent damage would be water damage. But if there was a fire at the property that caused the pipe to burst and then create water damage or cause water damage, the proximate cause is the fire, and as such the damage is classified from a proximate cause perspective as fire and not water, even though the damage would have been primarily water damage.
It's quite an interesting point, Nikita, because I think we've been talking to this during the week. It's one of the things that I didn't really understand about some of the basic principles of how insurance works, is that you have to follow this chain of events back to start to find the initial thing that happened? Because I think it's I can see how in my experience working with SME clients is that, you know, the frustration comes where, you know, the water pipe bursts, like you're saying, but the insurance company found that, the insurance company found that it wasn't that started the chain of events, and so that can lead to events being not insured, I think, as you explained to me.
Exactly. So I mean, by way of another example, if a car crashes into your home and causes the pipe to burst, again, the proximate cause would be the car crashing into the building. It is very much a chain of events, and the proximate cause being the very beginning of that chain, an irrefutable cause in that chain that subsequently led to other events which, somewhere down the chain, be it at the next point or some points down the line, cause the damage for which you're claiming for. And the final principle of insurance is responsibility, and this probably one of the most important ones is that the onus or the responsibility for proving that the event, that the insured event occurred, sits completely with the policy holder. So it's not, the insurance company isn't going to take on that responsibility. It is completely the policy holder to prove what occurred through whatever means necessary to ensure that, or to confirm to the insurance company that coverage needs to be awarded. And this often becomes the most complex because it loops back into the proximate cause, or the proving of the proximate cause, as well as just proving that the indemnity must also be there for the cause.
So Nikita, would that mean that effectively, from the insurer's point of view, the event is uninsurable until proven otherwise? Basically.
It's saying uninsurable is not probably not a correct use of terminology, but insurance companies, even throughout a process of a claim, they never confirm coverage until the very end. So you can go through a process of X amount of weeks, or sometimes even months, and in some cases even years, with going back and forth, providing information that was requested by the insurance company or their appointed parties, and still not understand whether you have coverage, because they will not confirm coverage until such time that they're basically awarding it.
Okay. So Nikita, your slides are actually not sharing at the moment, so you might want to hit screen share again. That might help the next part.
Sorry, let me try this again.
There we go.
Do you have them now?
Got them.
Perfect. Are they shifting?
Yeah.
Great. So the claim process, again, something people usually aren't aware of, especially if they haven't been through one claim or many claims, because the process can sometimes seem or feel different from claim to claim unless you've been through a significant amount of them. So when as a policyholder that buys a contract of insurance from an insurance company, when you make a claim, what actually happens is the insurance company appoints a variety of different third parties, or more specifically, they appoint one third party, being the adjuster, which is appointed from a completely independent, separate company that's simply contracted by the insurance company. And what these parties are responsible for is essentially deciding what will be paid for and what will not. You have the adjusters, and the adjusters can and often do appoint surveyors. They sometimes appoint engineers, depending on what the loss is. They often try to push their own contractors to do the works. And it's important to understand that all of these parties don't really have your interests at heart. And we see this time and time again with our clients, and how adjusters approach situations. They try to seem independent and say, "Oh, we're not from your insurance company. You know, we're an independent party," but that's simply not the case.
I'm guessing they're paid by the insurance company, aren't they?
Yes, and there have been historical instances of findings in multiple different countries where insurance companies incentivize adjusters to reject or underpay claims.
Mm-hmm.
Yes. Okay. Yeah, so sorry. So as I was saying, a good analogy for this is that when you, if you go to courts, the party you might be suing is appoints their own lawyers, so to speak, and this is very much kind of what can be analogous to an insurance claim, where the insurance company appoints an adjuster at a sort of arm's length basis. During the claim, you would often not interact with your insurance company, especially for anything above a sort of, let's say, mobile phone damage claim. Adjusters would be appointed to take this over.
Am I right as well that in that, so you've got that kind of board of different advisors that help the adjuster?
Yes.
Can you influence who those people are, or is it not up to you? So does the insurance company or the adjuster get to choose them, or can you help choose them?
Yes, so this is a very, very good question. So in most instances, the policyholder has the capability of appointing their own surveyors, their own engineers, and absolutely their own contractors to conduct the work. The adjusters cannot force you to use their chosen parties. This specifically is pretty relevant to surveyors and network contractors, because of course if an adjuster appoints a surveyor, it's going to be someone they have a pre-existing relationship with, right? And just by human nature, the surveyors are going to be more partial to the adjuster than they are to the policyholder. And the same very much goes for network contractors, where there's pre-existing relationships between adjusters and contractors, and they're usually operating on high volumes and low margins, which means that the work is just not up to the standard that policyholders would expect. And we've seen instances where claims were done without our involvement, and the contractors that did the work did extremely poor work.
Mm-hmm. So I think that's this point is a really good one for a lot of us on the call, because for me that's a really big surprise that as policyholders we don't actually understand our rights to appoint these independent advisors ourselves, or to at least object to or ask questions around why have you appointed that surveyor? Does that surveyor do work for you regularly? Is 90% of that surveyor's business working for you, Mr. Adjuster? So they're always going to give you what you want. So that insight I think is very interesting.
Yes, it's often the case that maybe it's not 90% of the work. I think it's difficult to estimate that, but it would be pre-existing relationships that exist there, and of course, just the bias is going to exist regardless.
Mm-hmm.
So what is business interruption insurance? So business interruption insurance is a type of extension above property insurance that's designed to protect businesses against losses of revenue or profits. Again, just like with all insurance policies, these are policies of indemnity, and they exist to protect you against a financial loss. In this case, the financial loss is actually a financial loss as part of the claim, because you're losing revenue or profits depending on what your policy might cover due to this. So your cash flows are supposed to stay protected in the event that a company can't trade or is unable to trade for some period of time.
So to be really clear, so it's not like an award, like just a payout for a set payout because your business was able to close. It is actually like you're talking about, it replaces what would have happened otherwise. So it
exactly
in the same position you would have been otherwise. Okay.
Exactly. So how this process generally looks like is let's say a restaurant were to shut down for some sort of damages to the property, during the claim, the restaurants would need to show their revenues last 3 months as well as last year, so it can be seen and sort of projected and established what the expected amount of revenue would have been during the period of closure. If the restaurant had events, for example, a corporate event that they were planning on hosting, they would need to provide proof of that event being planned and due to happen prior to the damages, as well as contracts with let's say the corporate party that's renting out the property. And if that contract was signed before the damages, for example, then the insurance company would be liable to pay whatever the agreement was for that event.
And that concept is sort of transferable to whether you're in a estate agent business and had to close your doors, or whether you're a manufacturer who couldn't put people on the shop floor. The same concept applies there.
Yes, and it applies across all businesses that are able to take out business interruption insurance. It could be dental clinics, it could be shops, retail, laboratories are some of our existing clients that had to shut down operations. Any and all businesses that can take out business interruption insurance would be covered. So as everyone is acutely aware, the pandemic that we're experiencing now, as well as the subsequent lockdown, has caused significant disruption throughout businesses and essentially a forced closure for many, specifically in retail, but others as well. And a lot of people are making claims right now, or attempting to make claims under their policies. Unfortunately, the situation is completely new, as we haven't really experienced anything on this kind of level before. And the complexities around this create a lot of uncertainty for a lot of businesses. So a large number of clients are making claims, and a vast majority of those are seeing themselves being rejected. And it's not a great situation, which is why the FCA is getting involved in the process, which I'll talk about shortly. But firstly, I'd like to cover some of the responses that we've been seeing, both for our clients as well as in the market, for why insurance claims are basically being rejected. So first and foremost, you have a material damage proviso, which exists in some policies, which basically means that business interruption coverage can only be triggered due to material damage to the property, be it a fire, a leak, or something of that sort, actual physical damages. Named diseases has been a big one. A lot of insurance policies have specifically named diseases that they say they would cover for. Of course, COVID-19 being previously unknown and it's something completely new, means that it wouldn't be listed, which insurance companies utilize for immediate rejections. Public emergencies and closures by competent authorities for notifiable contagious diseases on the premises, which means that there has to be a closure of the specific property or the specific location due to a disease that was a disease that's notifiable or labeled as notifiable by the government, but again, has to be on the premises. One of the key things about insurance policies, and one of the things that we see that a lot of people don't end up reading, and this probably extends to not only insurance policies but any contract, is definitions of actual terms. So when terms are capitalized within any contract, there's usually a definition either in the beginning or the end, and these can be words that we're extremely used to hearing and know the definition of, like damages. But for the purposes of the insurance policy, there's a very, very specific definition that can be used for the word damage or the word premises or any other word that they utilize within the agreement in order to specify specifically what they mean, because these things can be subject to interpretation by the reader. So just because it says, damage, and just because we can sort of argue that, I have experienced damage, in my understanding of the word, it doesn't necessarily mean that that our definition, our subjective definition, is what the insurance company meant. Damages to other property, which under most insurance policies is called denial of access, again means is in relation to physical damages to nearby properties that prevent access to the insured's or the policyholder's property. Compulsory lockdowns as a proximate cause, as we discussed previously, are not been covered in any policy that we've seen, especially again, if we relate back to the named diseases piece and the notifiable and contagious diseases on the premises piece, unless it's targeting specifically the property, or as most insurance policies define, the premises that's insured. It won't be covered. And finally, some insurance policies have what they call adjustments. And I've taken a quote directly from one of the rejections we received for one of our clients, this example. And we find it quite absurd, and we had a bit of an internal disgust at this sort of reply, because if we simply replace the kind of general lockdown of being here with a sinkhole, for example, and if the pub was not locked down because of a lockdown, but was closed because of a sinkhole, it seems to us, it seems what they're saying is, if the pub was swallowed up by a sinkhole, they would have lost business anyway. So there should be no coverage, which is just absurd to us. And I think it really shows how little some insurance companies can care about their clientele.
So is that effectively that the insurance companies are just trying to find the loopholes out of this? So trying to create sort of weird hypothetical realities, say, well, or focus on the fact that it's the lockdown causing it, not the pandemic, and they're trying to separate the two.
Exactly. So and this happens across the board with any type of insurance claim. It's not at all exclusive to the current situation, where especially if policyholders are filing claims themselves, adjusters look for any reason to reject claims, and they look for loopholes, and they try to find inconsistencies in what you're telling them, or how you're positioning the information you're providing them, simply to reject your claim outright. And we see this all happening all the time. We see this as much, I actually saw this morning with one of our clients as well, where the adjuster incorrectly provided information to the insurance company, which caused the insurance company to reject the claim. And it wasn't until I had a very frank and an honest discussion with the insurance company as opposed to the adjuster, that I found out that the information being provided by the adjuster has been inaccurate.
Yeah, that's not surprising. In fact, actually, a lot of the questions that came in from people on the call have talked about saying, well, they've spoken to insurance companies, they've spoken to or they've looked at their insurance policies, and it doesn't mention pandemic as a specific called out thing that they could be insured against. So does it need to mention pandemic for your business interruption to be approved, or technically anyway?
Not necessarily. It depends on. I mean, if we take the current situation, it could be a lot of different things that could be mentioned in policies that would provide coverage, or have the insurance company agree to indemnify the client and award that coverage. I mean, we haven't experienced a pandemic in any sort of recent history, especially on this global level. So it wasn't something that was ever considered as an option or as a scenario until now.
Mm-hmm. But a business interruption claim doesn't have to have a named list of, we only cover you for these specific things. It can be general, which is why when insurance companies telling you, well, we didn't insure you for a pandemic, they're probably not being truthful. At least technically, if they're really pushed for, that's not a correct use of the policy.
Well, this is a bit of a difficult area, simply because insurance policies tend to be fairly specific, right? To the level where, as with the named diseases option, they have a list of specific diseases in which an outbreak of would award coverage, and they would differ from policy to policy. It might be on the premises. It could be public emergency enclosure by a competent authority if we had an outbreak of smallpox, for example, which is listed on a lot of different policies. But it just to my knowledge right now, pandemics do not, the word pandemic doesn't even exist in any policies, I think, because it's just not something, well, we experienced at all in recent history. And I don't expect that insurance companies will include pandemics in a very loose and general description, because that simply opens them up to increased amounts of liability, which they, of course, want to avoid as much as possible.
But the key thing is, if they've not mentioned it, they're not also excluding it. No,
but there is a lot of exclusions for a lot of different things on policies, and again, it varies quite significantly. For example, there could be, and I've seen this somewhere. It was just trying to refresh my memory about which section it actually pertained to. I think it was under denial of access. There was a policy exclusion that excluded denial of access due to unnamed diseases. Mm-hmm. So they will say, oh, you'll be covered for a denial of access to your property, but not when it relates to a closure by a competent public authority. Which refers you back to the clause that covers you for public emergencies and closures by public authority, which will likely give you a list of diseases that they cover. In this current situation, they'll say, well, COVID-19 isn't on the policy, isn't a named disease on the policy, so you're not covered.
Okay.
So some might be aware the Financial Conduct Authority has gotten involved, and what they're currently doing is conducting a sort of a test case in courts with a group of insurers in order to really establish what is and isn't coverable under the policy given the current situation, and we hope that the result here would be precedents being set within the UK about coverage for some of the rejections that people are seeing as per the clauses in their policy. We are already seeing precedents being set in courts in the United States and in France for business interruption coverage under COVID-19. And we hope that the situation is going to develop as such within the UK. Just some general information about timelines on the FCA case. So a couple last week, the FCA started the case within the High Court, and sort of by mid to end July, the court hearing should have been done. It's important to note here that by far not all insurers are participating, and not all policy documents are being reviewed. But what we actually have noted within some of our clients is that insurance companies have relegated a little bit, and some are actually looking at and reconsidering claims that they've already previously rejected.
So they don't have to be part of this. They're just they're seeing that there is going to be a ruling and that's going to force them to pay out. So they just need to start paying out smaller amounts, I guess, if they can, and just getting you done.
Yes, well, what we expect to happen in this situation is, and this happens in every situation within claims, is that they'll try to negotiate and settle at some other amount or some amount in general, and then ask for what's called as a global release or a waiver on further claims in the same incident.
So is your view then, but potentially then by the end of July, there could be a ruling on this, forcing a sort of the insurers to go back to claimants who've put claims in, had them rejected, and review the whole claim again under the ruling of the FCA, or the ruling the FCA got?
So we expect that no one is going to, or the insurance companies are not going to be going back to clients. It will be, again, as the case of responsibility for, in the principles of insurance, it's going to be up to the policy holders to go back to their insurers and to refile their claims and ask them to be reconsidered. It's also unknown after this court hearing what's actually going to happen after that. And depending on the ruling, there can be pushback again and appeals by the insurers. And of course, there's only about 9 insurers that are participating in this, and only a subset of existing business interruption policies that are actually being reviewed.
But presumably it will set a precedent which will lead to
Yes.
industry-wide changes going on. So I guess one of the sort of things that we can walk away from the webinar today knowing is that if you have had a claim rejected, it's not sort of, if you've been through the process, you put in your business interruption claim, you've had the adjuster assess it, and you've had the firm know, that's currently now not the end of the story. The FCA is now working on your behalf to push through some industry change to see if we can get some different results.
Yes, I mean it's with insurance, the end of the story, so to speak, for any type of claim is it's not over till it's over, as they say, and there's exists a lot of both consumer and business protections for clients of insurance companies. We've had cases, just generally speaking, where we spent quite a long time, 6-7 months on a claim that's still rejected to the point where insurance companies give their final no. And then there's still multiple options after that. Their final no is not really final by any means. There's always opportunities to go through processes of mediation. There's the opportunity to complain to the financial ombudsman. Unfortunately, that process takes anywhere between 8 and 12 months. There's also the opportunity, of course, to pursue your claim and argue the rejection in court for single policy holders. And of course, the final is in cases like these where there's a large number of people whose claims are being rejected for very similar or essentially the same things, with similar or near similar policy wording. Class action lawsuits are also a possibility. So how do you increase your chances of a successful claim? And the process for filing a claim is never really and progressing through the claim is never outlined anywhere, and that's really exists in such a way to make it more difficult. So I talked about previously the process of what happens after you actually make a claim and the insurance company appointing an adjuster, but it's critically important to understand your coverage. From our knowledge and experience, most people and most businesses go out and they use a price comparison website to buy insurance for their home or for their business premises or their business interruption or whatever it might be, thinking that, oh, I'm being shown all of my all of my options for home insurance policies. Home insurance policies are all the same, so I'm just going to buy the cheapest one, or maybe from a company that I know that I've seen advertising before. But by no means are all insurance policies created equal. In fact, they differ quite a lot, even for things as basic as building insurance. And understanding what it is you're buying and what you're being covered for is critical. And this extends to things like getting additional coverage when you buy your policy. A big one, for example, within property again, is buying accidental damage cover. It is probably the single biggest bane in policyholders' lives, is realizing that their water damage to their property is being classed as accidental damage, which they didn't purchase, and it is quite a big one. So understanding and analyzing your policy, and understanding what it is you're covered for, and understanding all the definitions within that policy, as we talked about before, with regards to damages and premises and what exactly means what is a critical importance. Really going so far in as to really dissect your policy, and thankfully policies are becoming a little less complex in their wording, but it's still, it can still be quite daunting to understand and draw references from different pages and different sections to others that they're referencing. Is critical. Filing your claim is basically providing the first notice of loss in a very discernible and clear format, because the better you file your claim in the beginning, the better it's going to run down the process. In a part of a claim, people tend to be, or while they're making a claim, it's quite a, usually quite a disastrous situation. There's emotions running high and stress, and trying to deal with everyday life is difficult, while also trying to do an insurance claim. But as I mentioned before, it's critical that the information provided is diligently thought out, because anything and everything you say can be used against you throughout the claim. Providing supporting evidence and documentation, and really understanding what your rights are is extraordinarily important, because the adjusters and the insurance company aren't going to tell you. We've seen and had clients several times where they made a claim originally without our help. The adjusters came into the property, they reviewed the damages, and they chose to completely ignore things that were very, very obviously and very, very clearly covered by the policy. Thankfully, in the situation that I'm specifically thinking about, there was no global release or waiver signed, which meant that we could actually reopen that claim and get additional coverage from the insurance company. And that sort of ties into the third piece, which is claim management, and it is not something that's fixed. It has to be, it's a piece of claim management is tactful communication, negotiation with the adjuster, because coverage is subjective. We don't all have the same home, we don't all have the same property, we don't it's all extremely subjective, which means that there's every claim is going to be different from every other one, and approaching it correctly and understanding your rights is of critical importance.
Nikita, because I've been asking too many questions. We're coming up towards the end of our time here. So what I'd actually like to do is shoot in a few Q&As here that actually seemed quite relevant, so we can just start answering it. Some of this, I think, some of these, there's some interesting ones here that we might have answered already, but having some clear answers to them, I think, will be good takeaways for us today. So we've had Ben over at Stanbrook and Nicholson ask, our insurance has said that we're not covered for pandemic as it's not mentioned in our policy. Is there more to this? And I think we've covered this, but what is the sort of the key answer to that? Because I think a lot of people will have that point.
Yes, so it's again, it must have been a filed claim in a way where you reported the FNOL and said, there's a pandemic. So the insurance company immediately takes that in and says, okay, the client is making a claim for a pandemic. There's no coverage for pandemic. Sorry, claim denied. This again ties into tactfully filing the FNOL and specifically referencing coverage in your policy that may award that may lead to an award of coverage.
Okay. So another one from Michelle over at New View Homes. She's basically saying, what do I do if my claim's rejected? And we touched on this, but what would be good? Sort of, what are the next actions someone should take now if they've received a rejection on the claim they've already put in?
It's important to again understand exactly why your claim was rejected and how you filed it, and then drawing reference from the policy and doing so. Understanding the claim you're filing. Filing a claim. I've been closed down for COVID-19 due to COVID-19 pandemic will immediately yield a rejection, because this is specifically the wording you use to file the claim. As such, it's not covered. What you can do is review your policy in detail, or appoint someone who, like ourselves, who understand policies, who can look into exactly what is and isn't covered under your policy, understand why your claim was denied, and then look at other options such as filing a claim to the financial ombudsman, which, as I mentioned, could be at this stage probably be a more than a 12-month process, just due to the volume. You could pursue them in court, or you could join a class action lawsuit that may arise in the future for your insurance companies or groups of insurance companies.
So I mean, it feels to me as, you know, someone not immersed in the insurance space, you know, it's actually incredibly complex. How your, you know, or complex reasons why they've rejected your claim. So I think my advice to people in this call is that you do need to seek professional help if your claim, the way that you see it, and we've learned today that our business interruption claim is indemnifying the financial loss you had over the period. For some of this is really big. Some of this is not that big, but for those particularly in a retail setting, clearly this can be quite large over this period. So it's worthwhile getting some professional help, looking at why you've been rejected and what to do next. I think that's my big takeaway.
Just drawing on my previous analogy, I mean, you wouldn't go to court without a lawyer. You really shouldn't be making an insurance claim without professional help.
So a few it's come a few times a question. We had Jess from Two Bull Steakhouse saying, will I qualify for this in my insurance? And I think there's a lot of people not even knowing, do I have business interruption? So how can I find it out if I've got business interruption insurance in my insurance package that I was sold and I just pay my premium every year? And is it quite normal that most businesses who purchase insurance via a broker sort of just to tick all the boxes that they have business interruption?
So generally, I mean, what you receive when you buy insurance is two things. You get an insurance policy booklet, which will be semi-standard, depending on specifically if you're a retail business or a trading business, a contractor, whatever it might be. The policies will differ, but for all types of businesses that take out that policy from a specific insurer, the wording will be the same. The subjective document is called, well, there's two: the statement of fact and the schedule. And within the schedule is what you'll see that you're covered for. And typically, if you own the property that you operate from, you usually have your buildings insurance. You might have contents insurance, as well as business interruption, and it will be clearly listed on the schedule, and it will say if you have that coverage, and in some cases it may say what that coverage is limited to. Although more often than not, unless you're buying very, very specific, more tailor-made policies, that limit will be listed in the policy wording, which for most SMEs is up to £100,000.
Okay, which is for I know for fact, looking at the list of people who've come on the call, that's a decent amount of money, and it's enough amount of money to make a difference in how they're operating their businesses. And presumably as well, you can call your broker, and your broker should be able to explain what's in your policy or not. But I'm guessing brokers are getting a lot of calls like that at the moment, so that might be difficult to get some time.
Yes. I mean, it's important, as I think I've repeated multiple times. It's important to understand what policy you're buying. Not all policies are created equal. Some will have exclusions that others will not. Some will have coverage for certain things that others will not. Yet they're marketed very, very similarly, to the point where on a price comparison site you'd see this. Here's your choice of policies. Pick one. But what they don't do is go into detail about very specific things, such as loss of rent for landlords, or matching for general property, and whether it's profit or loss that you're protected on for business interruption. And all of these are extremely important points, because they're all subjective to your business, yet most people don't understand this.
So that segues well. And just the final question, which I'll put up, is if I'm a landlord, and we've had a few landlords on the call, and presumably quite a lot that will look at the recording of this. If they're asking the question, if I'm a landlord, I've lost rent income, is business interruption sort of the insurance process that I should be looking at? Because I know you guys have insurance, you're property specialists, you know, in what you do. So should landlords be looking at business interruption?
So landlords have something, or should have something different, because it's treated slightly differently for the purposes of collecting rental income. And what most landlords will have on a landlord's insurance policy is called loss of rent. And that provides coverage for lost rents, but almost in all cases refers to the material damage proviso, which I talked about previously. So it has to be as a result of an insured proximate cause, which would almost always be physical damages to the property that makes the property uninhabitable, and as such removes the rental income from the landlord for a certain period of time.
So it's probably, I'm guessing, understanding that it's unlikely that a landlord, so be it a commercial landlord or resi landlord, is going to be able to recover rents that became sort of delinquent or whatever because the tenant was unable to pay because of COVID-19. That's probably not going to pay out under those sorts of insurances.
It needs to be explored on each individual policy to understand the exact coverage that they have. I can say for certain that if your property, be it residential or commercial, was unoccupied before COVID-19 and that it remained unoccupied during COVID-19, you will absolutely not receive any coverage. But if other factors play in here, then it's going to depend on your policy, whether or not coverage can be attained, and we're more than happy to have discussions with everyone who would like our eyes on the policies and some initial advice. It should be noted that for most cases, claim makers work on a strict no-win, no-fee basis. So even if we conduct loads of work for you, if you were to choose to appoint us, we would, and the claim was not successful, there's absolutely nothing that you'd be liable to pay us.
Right. Well, I think that kind of brings us to final conclusions. We're just about out of time now, but just a few takeaways that I've picked up through this. I think that one of the big ones is that if you've been through a claim process, you've already got ahead of the game and you put a claim that's been rejected, that's probably not the end of the story now, because the FCA are conducting this test, and I've won. I mean, I can see you're saying that maybe 8-9 insurers are only part of that, but I would probably safely assume that's going to have, if it rules in favour of the claimant, then I think there'll be knock-on effects across the industry. So hang on in there, because that's happening. And also, if you've been rejected, it's clear that you need some professional. If the claim you think is going to be big enough, you need to get some professional help. So speaking to Nikita and Adam, and they're more than happy, by the sounds of it, to pick up and have a look at your policy, check on it. So if you've been rejected, it's not the end. Clearly, as we're going through this, it is a lot more complex than I think on the surface most of us imagine. So I think getting professional help from the start is really key. And then also, just at this point, I think is looking at some of the questions, and you need to be sure about what you're insured against as well. So I think if you're on this call and you don't understand what's in your policy, a good kind of next action would be to have a look at that schedule, speak to your broker, and just understand whether you do have this business interruption cover, because if you do, it's certainly worthwhile starting the claim process, because the payout at the end of it could be quite considerable. Great. Okay, yeah. So Rosie will be sending around the slides. Everyone's got access to all the information that Nikita's put together in there. Rosie also put information of how to get in contact with Nikita and Adam, and to have a discussion, just to sort of I think, Nikki, you're willing to talk to anyone about anything around their policy, where it's just starting to have a look at it, they're starting to make a claim, whether the claim rejected, just reach out to these guys and have a chat. I think you can probably reach them Googling around for claim makers as well. You'll find them pretty quickly. And these guys are going to be able to help you. Great. Well, thank you very much. There'll also be a recording, as usual, I think, sent round and made available. So if there's other people in your business who've not been able to have a look at this, and certainly we'll be sending this across our client base to have a look at, so you can spend some time listening to the detail that Nikita's been able to share with us today. But thank you for joining, everyone, and we'll catch you soon. Thank you.
Thank you very much.
Thank you.